Doge is shaking up our economy, and in this video I want to show you how this creates an investment opportunity that most people are ignoring. Take a look. Doge has been making some sweeping changes which have a direct impact on our economy with the goal of hopefully reducing some government waste. Now, to be clear, my goal in this video is not to talk politics. There's enough people on the internet to do that. My goal is to show you how you can grow your wealth through these economic changes, because there's a lot of them happening right now. Every financially savvy investor wants to know where money is moving because that shift creates an investment opportunity, and Doge wants to move a lot of money. Take a look. In 2024, the United States government generated about $4.9 trillion in tax revenue, and then they went out and spent about $6.75 trillion in tax revenue, which means the government spent around $1.85 trillion that they did not have. This is the money that Doge is looking to move. I'll explain what that means in just a minute, but to put this $1.85 trillion into perspective, this is enough money to go out and buy Costco, Walmart, Nike, Starbucks, and Coca-Cola combined. Every investor wants to own a piece of the economy. But remember what I said just a minute ago. The financially savvy investors want to know where the money is moving because those are where you see the even bigger profit opportunities. And this is what Wall Street does. They're not focused on the emotions. They're not focused on the politics. What they want to know is, how is this going to change? Where is this money going to go? Because that is where the opportunity is. And this is the information which unfortunately gets left out for the majority of Americans. So Wall Street gets rich while everybody else posts angry comments on Facebook. But that ends today. Four of the biggest changes that we're seeing by Doge include: number one, cutting of aid, especially international aid; number two, changes in technology within our own government; number three, pushing to mandate return to office for the government; and number four, potentially passing out these Doge dividend checks. Let me go over now how each one of these can create a unique investment opportunity, and you're going to want to stick with me until the end of this video. And just so we're on the same page, there might be some topics that make you feel a little bit uncomfortable or not so good. And this is where my belief is that a good investment opportunity is one that makes legal sense. Number two, it makes financial sense because you have the opportunity to make money. And number three, it makes moral sense. I am not going to be your moral compass. I want you to make that decision. I'm just here to tell you what's going on because this is what Wall Street understands. And then I want you to make decisions based off of what makes sense for your moral compass, because unfortunately a lot of investors have forgotten about that. And with that, let's jump in. One of the first things that Doge did is they cut foreign aid and they cut US aid. US aid is an organization that provides infrastructure and healthcare and other foreign aid to countries around the world. And US aid did this by sometimes just giving money. Other times they would actually build these projects or build this infrastructure themselves. For example, one of the biggest beneficiaries of US aid in 2024 was Ukraine. Now that we understand that, how does cutting this foreign aid create a potential investment opportunity? Well, US aid had a big budget. How much money? Well, something in the ballpark of around $50 billion a year. And so now if the government, the United States government, is not doing these infrastructure projects, if they're not doing these development projects overseas, well, there might still be a need for some of these projects. And if they're not being done by the United States government, then these foreign countries might contract other private companies to do some of those development projects, to do some of those infrastructure projects that were being done by US aid in the past. And there are companies that do exactly that. For example, there are companies like Fluor Corporation that focus on building infrastructure in countries around the world. Or instead of trying to find the perfect company or stock that might get benefit from this, there's also ETFs that give you broad exposure to this. For example, the iShares Global Infrastructure ETF invests in companies that build infrastructure globally. Now listen, I am not telling you what to invest in, okay? I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. We don't know what's ultimately going to happen. It's still too early to tell. We don't know which companies are going to benefit. It's still too early to tell. I want you to start thinking like an investor, of understanding when a shift happens, how could that create a potential new opportunity? If the United States government is sending less money in foreign aid, well, that means that certain countries and certain companies are going to receive less dollars directly from the United States. but the countries that still need infrastructure projects might have to finance it themselves. And if they don't do it through the United States government, they might be going through different private companies, which could potentially create an investment opportunity, something that I want you to think about. Which now brings me to number 2, talking about technology. And this is where I want to emphasize this. We are seeing changes happen in our economy really at very fast speeds. And this is one of the reasons why on March 11th, 2025, I'm hosting a free, live, and virtual wealth building workshop where I'm going to be showing you, number 1, what are the shifts that are happening with Doge and tariffs and AI and just the Trump presidency, and how do these create unique investment opportunities? So if you want to learn more about things like this and how you can find these wealth building opportunities, it's a free workshop and I'm doing it live on March 11th, once in the morning at 10:30 a.m. Eastern Standard Time and again in the evening at 8 p.m. Eastern Standard Time. It's completely free, but you do have to reserve your spot because there's a limited number of people that can actually join me live. So if you want to join me on this workshop, I have the link for you to join down in the description below. Here's something that should not be very political. There are certain departments in the United States government that are operating on very, very, very old technologies, which is making work inefficient because their technology is so old. I mean, the State Department was still using Windows XP in 2023. Well, Doge wants to fix this. They want to reform our government technology to hopefully streamline some of our work through better tech. Now, this is where I want you to think like an investor. The government is not going to create a new technology. The government's not going to go out and create a competitor to Windows XP. They're going to go to the tech companies and pay them to update their technology if they ultimately decide to improve their technology. And based off of what we're hearing today, it looks like the government wants to revamp their entire tech stack. Now, the next question is, who are the tech companies that are selling services and products to the United States government? Well, I used technology to find that answer. I Googled the top 25 tech providers for the United States government, and here's what I found. At number 1, we have HP. At number 2, we have IBM. At number 3, we have Jeppesen. At number 4, we have Dell, and on and on and on. This is where I have to remind you, just because you identify an interesting shift doesn't mean that you're guaranteed to make money in that shift, because we know that the government wants to revamp their tech. They might spend a ton of money to do so, and you might say, I'm going to buy HP. Well, what if HP doesn't get any of those contracts? Or what if HP does get a contract and then they run their company into the ground because they manage their cash badly? This is where you have to understand how investing works. Understanding the shift is just the first part. The second part is also analyzing and understanding the company. Is this company managing their cash well? Does this company not have too much debt? These are the types of questions that you want to be thinking about as an investor, which is why, again, it's not just about finding a random company, it's about really doing that analysis and research. Now let's move on to number 3, return to office. If you've been reading Market Briefs, which is my free financial newsletter, you know that Doge and Trump have been working to mandate a return to office protocol for all federal employees. Now at first glance, you might hear that and say, oh, that means office landlords are going to get rich again because these buildings are going to get filled up. But the problem with that is that the United States government owns a lot of the buildings that their employees operate out of, so that's not really going to help any of those office landlords. But this is where things get interesting, because even though government employees going back into the office doesn't directly benefit office landlords, it does create what I like to call a culture shift. By the way, if you have not joined Market Briefs yet, it's my free financial newsletter for investors where we break down what's happening in the financial markets into a quick and fun read. And I have the link for you to join Market Briefs for free down in the description. Here's what I mean by culture shift. As soon as Trump entered office, he took a very hardline stance on return to office. And this gave some private companies the reinsurance that they needed to implement their own return to office strategies. Now, for full transparency, return to office isn't a new trend for 2025. We started to see it happen in 2022 after the pandemic really started to die down, but it looks like it's starting to pick up now. For example, Stellantis, the car company, announced a return to office mandate in 2025. Jamie Dimon, the CEO of JP Morgan Chase Bank, said get back in the office or quit, and dozens of other big companies are now mandating return to office in 2025. Again, the government is not telling private companies to return to the office, but it feels like this culture shift where the government mandating employees to go back into the office is giving private companies that assurance that it's okay to tell your employees to come back into the office. Now you can start to see how this could be potentially creating an investment opportunity, because if non-government employees now are being forced to return back into the office, well, that means that companies may have to renew or extend some of their office leases. And not surprisingly, office landlords have been decimated since 2020. But this culture shift could, that's the key word, could indicate the potential bottom for the office real estate market. If that happens to be true, that means the office REITs could be in a position to benefit from this culture shift. By the way, a REIT stands for Real Estate Investment Trust. You can think of it like a company that invests in real estate. When you invest in a REIT, you're not investing in the real estate, you're investing in the company that's investing in the real estate. Is there risk to investing in this? Absolutely. But that's your job as an investor to identify what's a good investment opportunity based off of your risk tolerance. And then of course we have these Doge checks, because Trump and Elon Musk have both talked about issuing these Doge dividend checks to taxpayers. Now the whole idea behind these Doge checks is Doge is working to reduce government spending. They're working to reduce some of this deficit. Remember this from the beginning of the video? And what they want to do, or what they say they want to do, is take a piece, maybe 20% of the savings, and then return these to the taxpayers that paid this money into the government in the first place. So it's not really a stimulus check like we saw in 2020 and 2021. You can think of it kind of more like a tax refund, where if you are a taxpayer, you could potentially be seeing some of your taxes back in the form of this Doge dividend check. But that also means that if you're low income and didn't pay any money in taxes, then you're probably not going to be getting any of these Doge dividend checks. Now, whether or not these checks get approved is a completely different question, but let's take this one step further. If these Doge dividend checks do get passed, and they send out thousands of dollars to taxpayers as a refund through this Doge dividend check, how does that create an investment opportunity? Well, there are three things that a recipient of this Doge dividend check can do with that money. If you get this money today, you can either take that money and spend it, you can take that money and save it, or you can take that money and invest it. And this is where things get interesting, because if you save that money, then that really doesn't create much opportunity for anybody else, because you take the money, you put it under your mattress, you put it into your bank account, and it doesn't really do anything. But regardless of whether you spend that money or invest that money, this can benefit other investors. Why? Because if you go out and spend the money, if you take this money that you get, this extra money, and you go to Walmart, you go to Amazon, you go to Apple, you go to Gucci, you go to Chipotle, you go anywhere, and you spend that money, who does that benefit? Well, yeah, it might help keep the employees in business, but the real beneficiary when you spend money at a business is the owner of the business, because the owners are the ones that get the profits. Well, who is the owner of these businesses? Well, it's the investors. And you can be an investor in Chipotle. You can be an investor in Amazon. You can be an investor in Apple or whatever company that you want, just by buying their stock on the stock market. We saw this happen in 2020 during the pandemic when the stimulus checks were sent out, because a bunch of people got free money in the form of unemployment checks or stimulus checks or PPP loans or grants or whatever you want to call it. A lot of free money was sent out and a lot of money was spent. And who benefited? Well, investors. Because between 2020 and now, we saw wages went up around 20%, but the stock market went up around 80%. So investors got the windfall. So if these Doge dividend checks do get passed and some of that money gets spent, that's good for investors, because that means more dollars goes into the hands of the businesses, more dollars of profit mean that the investors who own those businesses benefit. But this is where things get interesting, because it also benefits investors if people invest this money as well. Because a stock price is ultimately determined by what? It's not determined by a company's profits per se. It's not determined by a company's revenue per se. It's ultimately determined by supply and demand. When you have more buyers for a stock than sellers, that stock price is going to go up. When you have more sellers for a stock than buyers, that stock price is going to go down. And one of the things that can influence the demand for stocks on the stock market is people's ability to actually buy stocks. Because if people are broke, they're in debt, they don't have money to spend, they can't worry about investing in stocks because they got to worry about paying their bills. But if people have some extra money and then they go out and invest this money into the stock market, that could create more demand for stocks. More demand for stocks can ultimately help push stock prices higher. So if these dividend checks do go out and people spend that money or they invest that money, that is good for investment values, that is good for investors. If people save that money, well, it doesn't create that big of an investment opportunity, but we know that American culture is very big on spending, and people that are financially savvy know the importance of investing that money. Now, you don't have to go out and try to pick which company to invest in, by the way. You can just invest in the American economy. You can just invest in the top American stocks. I'm going to give you a couple examples. Again, I'm not telling you what to invest in. You can invest in something like the S&P S&P 500. The S&P 500 is a group of the 500 largest companies in the stock market. Now, instead of you trying to go out and try to find the next Amazon, the next Nvidia, the next Apple, you can just invest in the top stocks. For example, there is an ETF called SPY. SPY is an ETF that gives you exposure to the S&P 500. So if you buy one share of SPY, you're buying a piece of the 500 largest companies in the stock market. So if these Doge dividend checks go out, you bet that that would help stimulate the economy. What does that mean? That means that people would ultimately go out and spend some of that money. If that money gets spent, that's going to help some of those businesses in the economy. And you can just invest in the economy or a big piece of the economy by investing something like the S&P 500. You could also invest in something like VTI. This is an ETF that gives you exposure to the total stock market. This is where, again, you got to know your investing strategy, you got to know the game you want to play, and you have to know how to do your research. These are the things I'm going to be going over on March 11th in my workshop. I have that link for you down in the description. And if you want to stay up to date on what's happening in the financial markets, again, Market Briefs is a free resource. I have that link for you down in the description as well. President Trump is now considering getting rid of the income tax. Take a listen.
As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens.
The Fair Tax Act of 2025 was a bill proposed which would effectively abolish the IRS.